Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. In this episode, I want to get into just a little dive on Kevin Warsh as chair of the Fed, where basically we've had a couple of meetings under his tenure, so his first couple of meetings. And we want to take a look at sort of the changes that he's made in terms of how they're communicating, for example, some other things he's done, but then also try to unpack really an important source of information is the press conferences. So the official statement from the press conferences, and then the Q&A segments of those sessions, right? It's just a nice sort of open way to understand what's going on. But to take a step back, recall that number one, as Warsh was coming in, and probably in advance of his arrival in a way, he shared a lot of different values. And one of them was essentially to kind of eliminate forward guidance from the Fed. So make the communication a lot more brief. And of course, in his first meeting, he cut the policy statement quite a lot, very sort of factual, with, by the way, a real reinforcement of a commitment to getting inflation under control. And basically, in the subsequent meeting in July, the same thing is almost the same statement, except for the fact that the vote changed, which we'll get to in a second. But again, he used the press conference as a way to communicate some things. Now, he also announced relatively early 5 task forces to review the Fed's core practices. And this is about the balance sheet, about data, productivity and jobs, inflation frameworks, things like that. And so think of it as a group of folks, and he basically tasked people from the private sector with a range of views to review those things, with the idea that by the end of the year, they'll have their findings. And of course, they'll bring their findings back to the Fed, and the Fed will ultimately decide how it's going to evolve and change the way they do things, if they decide to change things at all. Now, the second meeting was the first time under Warsh that he had a split vote. So it was a 9-3 vote. There's been worries about inflation. Therefore, there are a few, in this case, 3 officials that voted for a 25 basis point or 0.25% increase in the Fed funds rate. And you know, people were trying to make something out of that. I think at the end of the day, what is good is there's some transparency that there was a debate, that there's sort of this modest leaning towards tightening. Warsh in the communication, so in the press conference, described it as a quote unquote family fight. So in other words, almost like the way families will go back and forth and debate things. But ultimately, in this case, where the officials agree on the objective, which is to control or get inflation under control, but a handful have different views on timing. Now, as it relates to other things that he reinforced during the discussions, he talked a lot about market data, and so he's talking about things like credit, confidence, currency, different things that they're looking at. He also mentioned the concept of a reaction function. And this, importantly, is when the labor market is at equilibrium, so the labor market is in a good spot, then you should expect tightening if underlying inflation rises, and easing if underlying inflation falls. And so again, I think the idea here is he's sort of saying the kinds of things that they're going to keep an eye on is what are the signals around the job market and equilibrium in the job market, and what are some signals around underlying inflation. Now, people have wondered about the Fed, not just under Warsh, but others, whether, given all the inflation we've had, whether they'll increase their target from 2% to something higher, 2.5% or 3%. And Warsh has come out very clearly that he doesn't see the inflation objective of 2% changing. It's not up for debate, even within these task forces. And so, again, the statements, June and July, both reinforce the Fed's commitment to trying to meet its target. And so, of course, in the communications, in the press conference, there was just a reinforcement by Chair Warsh that they remain committed and that they don't see that task as being done. Now, interestingly, as it relates to sort of the impact on markets, and we talked about this early on, essentially that by not having forward guidance, in theory, that is introducing some uncertainty, and investors want to be paid for uncertainty. So the idea here is that potentially the term premium on Treasury bonds, so on the yields on Treasury bonds, has gone up, and some are associating that. They have gone up, and some are associating that with basically the desire for a greater compensation, i.e., a term premium elevated for the assumption of that risk of uncertainty. And then, just because it's kind of related, the Fed has a special lending facility, and Japan was needing to raise funds to defend the yen. And so Secretary Bessent, Treasury Department, basically has asked the Fed to increase or expand the lending facility to allow Japan to borrow to defend the yen rather than selling their Treasury holdings. And they own over $1 trillion of Treasury holdings. So the number I have is 1.14 trillion. Now, Warsh also commented a little bit on the interesting challenges that that they face when it comes to gauging the economic impact of AI, from growth to as well inflation. So they've acknowledged really increased growth rates on things like AI-related equipment and software. And the Fed has to kind of figure out how to evaluate the impact of all that on how it's going to boost output. But then we've also seen things like chip and AI infrastructure prices rising. And so they have to monitor that in the context of inflation. And I think we're all recognizing that AI is really powerful. There's a lot going on, but it also creates a lot more information, a lot more things for folks to track. Now, as it relates to looking forward, basically, people are continuing to watch the different appearances that we might see from Kevin Warsh. And one of the next ones is later in August. The Kansas City Fed is running the Jackson Hole Symposium. And so it's a tradition that he'll be there and he'll speak ultimately. And that's just another forum that we'll see before the next meeting in terms of seeing communications. And again, I think he signaled the idea of checking in with the task forces before that event, and he may provide some kind of update in those comments. So anyway, that's what we wanted to get into. It's sort of like keeping a finger on the pulse of what's going on with the Fed. Ultimately, the net result of all of that is maybe a slight increase in interest rates related to the behavior, the lack of forward guidance, and that kind of thing. And so, of course, we'll keep an eye on it, both as it relates to the Jackson Hole event, as well as future meetings and any other sort of communications that we hear. Listen, really appreciate you taking the time to listen to this episode, and we'll catch you on the next one. Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.